Good morning, everybody. Yesterday, I had a case where they were so emphasized, they were so strong on requiring to go on an FHA loan. And there were reasons that they could not go on an FHA loan. And they thought we are first time home buyers. We need to be getting an FHA loan. So today I put in a presentation because there's details that people don't understand. Because you are a first-time home buyer, you don't have to get FHA. You can get an a conventional loan. If you're a veteran, you don't have to get FHA. You have great benefits with the VA loan. Okay, plus it's zero down payment. Okay, if you're a first-time home buyer, you can get a USDA loan. Okay, so not because you are a first-time home buyer, you have to get an FHA loan. Okay, so it's something very simple to us that we do this every day. But when buyers tell me all these things, why they think that one loan is better than another one, I need to go ahead and put the facts out there. So hopefully this helps not only just buyers, but you realtors, because yeah, not everybody, and actually not everybody's going to qualify, regardless whether they're first time home buyers or not, for an FHA loan. So let's get to it. Okay, 1 second. There you go. Okay, so everybody thinks that FHA home loan, it's only for first-time home buyers because they have the F on the first, the H on the home, and the A, and they think it's an assistant. When actually an FHA home loan is a Federal Housing Administration. That's what FHA stands for, Federal Housing Administration, because it is insured by the government, okay, by the Federal Housing Administration. So no, it is not. F is not for first-time home buyers. H is not for home, and A is not for assistance. Down payment assistance programs are completely different that you can use in most of the loans that I told you, and I will do a segment specifically for first-time home buyers. Okay. So now that we got that out of the way, minimum credit score. Most people will think that you have to have a 620, 640, way above 600 to qualify for an FHA loan, which is wrong. The credit actually, it's 500. Okay. Yes, you can go all the way to 500 credit score and you can still buy. There's requirements, okay, because we got to understand 500 is not the best credit score, but yes, you can buy with a 500 credit score. But then again, you're going to buy with a 500 credit score and you are not going to get a 3.5% down payment. Okay. In 1 second, I'm getting... I'm getting notifications and I don't know if I'm live or not. I just want to make sure. Notifications and I don't know. There you go. I am live. Perfect. Okay. So again, for a 500 credit score, that's going to require you to put 10% down payment, and then you can still, buy with a 500 credit score. Okay. But with 10% down payment. So if you want to go ahead and enjoy the 3.5% down payment, then you need to have 580 credit score and higher. So yeah, it does not have to be 620. It does not have to be 640. It does not have to be 680. Down payment assistance programs, which is a completely different program on top of the loan that you are going to be qualifying for. Those might have those extra requirements. Okay. In the lending world, we'll call those overlays. Okay. But yes, you can buy with a 500 as long as you have at least 12 months of really clean history, that you don't have no leaks, but it'll require 10%, and 580 credit score and above, then you can only put you will only be required 3.5%. Okay, so that's for the down payment. Debt to income ratio. Most buyers don't understand what this is, and I get it. This is kind of confusing sometimes. Okay, but all it is really is how much money do you make, and out of that, including the house payment, how much money is going to be used, or what you make, and that is before deductions. Okay, everybody's like, well, I take home. No, it doesn't matter how much you take home. It's how much you actually make. Do you make $5,000 a month? Do you make $10,000 a month? It's before Uncle Sam takes his cut. There you go. I said it. So most, again, some lenders will tell you that you cannot go higher than 43% on that ratio, okay, on that percentage of how much you make compared to how much you're going to be paying out in the monthly payment for your house and any other debt that comes up on the credit report, or student loans or child support, all those debts, okay? But there's lenders, like I work directly with lenders, so there's lenders that will allow you up to 56.99. Yes, that is going to be more than half of what you make. Yes, that is going to be half of what you make before. It's not half of what you bring home. It's half of what you make before deductions. And that is where people get confused. So at 56.99, yes, interest is not going to be that great. You are at the top of your percentage allowable for FHA. Can it be done? There's times that you can get it done, but there's a price for everything. So yeah, if you can get 50% or less than 50%, the interest is going to be better. So I mean, that's why I say all the time, ideally, DTIs should be under 50%, but FHA is usually used for people that they have a lot of debt and we need that room, because conventional will not allow it. They're not military or retired military, so they cannot get on a VA loan. They have too much debt. So absolutely, the USDA, even if the house qualifies for USDA, they cannot go use USDA because of so much debt. So one of the choices, where the choice is really FHA, is mainly because of that, because they have too much debt. Property appraisal. Let me see okay, here you go. This is another one. I have not been at work for 2 years. Doesn't matter. I need to see 24 months of steady income. Steady income. If you were working at one place and then you moved, you took an opportunity, or you had to move, but there hasn't been any gaps within the last 2 years, that is considered steady income. You don't have to be at your job for 2 years at the same employment because you want to buy a house. Okay, it has to be verified. So if they pay you with a 1099, they give you a 1099 at the end of the year, that verifies your income. If they pay you with a pay stub, that verifies your income. They pay you with, I don't know, you're self-employed, and they pay you with cash or with credit card. Well, show me your income taxes. There's a way to verify your income. So if it is verifiable, I will count it in as verifiable income, as good income, as steady income. So for all those nitty-gritty different situations, just go ahead and call me up, because there's so many different things that we really need to sit down and talk. If it is very, very specific what you do as a job and how it is that you get paid. So let me find a way to show that you have steady income, and I need to verify it. So if I cannot find a way to verify it, then we cannot use it, and we have to go some other way. Okay, that does not mean that you cannot buy. It just means that we're not going to be able to verify it with pay stubs, with 1099s, with W-2s. We might have to verify it with bank statement from the banks, and that is a whole different show. Okay, so for anything specific that you are iffy, does my income is enough, does the history of my job is enough, I had gaps. Well, there's, I don't want to say that gaps are okay, but there are very specific situations where it is it's overcome. We can overcome it if there is a specific situation. So for those iffy little things, just go ahead and contact me, and I can go ahead and explain to you how it is that we can do it, or if it can even be done. Okay. Property appraisal. This is another one. When 2021 hit 2022, if you didn't have a conventional loan, if you didn't have cash to buy a home, you were out of luck. Okay, because FHA appraisals, the inspection from the bank, the appraiser is the eyes of the bank, so they are a little bit tougher than a conventional appraisal, and it's not as tough, I think, than a BA appraisal, but they're not as easy as a conventional. Okay, so here's the thing: you can have, if that house that you're gonna go show, make sure no broken or missing windows. You know, I mean, they can be broken. They cannot be like just the hole there and no window. Okay, it must have a hidden element. Paint, the paint cannot be peeling. Okay, the HVAC system, if it's available, it must be working. Okay, no holes on the walls. The ceiling can be falling off. This is not a rehab. There's another, there's an FHA loan for rehabs. Okay, but doing the regular FHA that I'm explaining right now. It must have flooring. So you see most of the bedrooms have carpet or tile, and there's this one bedroom that has nothing but concrete. That's not gonna fly. Foundation, it cannot be cracked. Okay, it can be repaired and then send the appraiser in. I'm actually working on a deal just like that, but they told them up front, so we didn't have no surprises. So now this lady is finally going to close on that house. The roof and the structure, they need to be in good repair. The roof can be missing pieces or be on the very last legs. Okay, and these are standards that were set by the FHA. So I mean, that's what the appraiser has to be FHA approved appraiser. Okay, and they need to assess the property condition specifically with the FHA standards. Okay, so it needs to meet safety, livability. You need to be able to live in there. Okay, and it must make value. What does that mean? If you offer on that house $350,000, that report better come back and tell me that that house is worth $350,000. Because if not, that deal can go both ways. The seller can go ahead and say, okay, well, that's how much it came out to. Okay, well, let's go ahead and lower it to that. Let's close this deal. But they can also say, oh, no, I know it's worth $350,000. The seller's agent can go ahead and fight it. And if there are comparables, if there is proof, if there are facts, and it can be documented that that home should be valued at $350,000, then we win, and everybody wins. The seller gets the money, the buyer gets the keys. Otherwise, the seller goes on, keeps on trying to sell this property that is not worth $350,000, and the buyer loses their option fee, because at that point with an FHA loan, your deposit that you did, that is called earnest money, it is safe, because that is you cannot just, okay, the buyer is approved, the buyer is qualified, the house has to qualify as well. So if the house does not meet the value criteria, then the buyer gets out of that deal and unfortunately has to go and look for another one. But that is a safety net of this FHA loan. Okay, I skipped several ones. Yeah, that's the appraisal. FHA also has this thing that is called mortgage insurance premium. Okay, and that's exactly what it is. FHA loans require that insurance premium at closing. Okay, and then they divide that amount and put it on your mortgage payment for 12 months. Okay, that insurance, that monthly little amount is going to protect the lender in case that you, the borrower, defaults on the loan. What's default? That you don't pay on the loan, okay? And that's why this FHA loan is very helpful. However, if you don't pay, well, with any loan, you get your house taken away. But the most important thing is this mortgage insurance. This one, you don't have a way out. Like on conventional loans, that if you pay 20%, you don't have mortgage insurance. On this one, it's going to be for the rest of your loan life, okay? Or until you convert into a conventional loan, and you you are only getting 80% of what the house is worth, okay? So those are very specific situations. Again, FHA loans, they have their own regulations, their own rules, and it is only for primary residences only. You must live in there. You need to certify that you intend to live in the home as your main home. It's not going to be good if you say, I wanted to rent it out. I want it as vacation because I live in Colombia, Puerto Rico, Mexico. It needs to be your main home. So if it's not going to be your primary residence, FHA is not going to be the one. But hello, if you have an FHA loan in Puerto Rico or in any other state, there's a certain amount of miles that you can be away from that primary home, and you're moving to another place because you are working or you already live over here. That home is being rented out because you're living over here. The house is in Puerto Rico. It's really, really far away. Let's find out how far away is it from San Antonio or from whatever it is that you're living now. And you might be able to get a second FHA loan. Yes, there are rules and requirements for this thing, but I need to get all the puzzle pieces in order to be able to help you out. So hopefully that explains to you what an FHA loan is and is not. Okay, so why would I put you on a loan where your wife or your husband has really, really bad credit and bad debts and a lot of debt, when I can put you on a conventional loan and then just forget about the spouses or your significant others debt? FHA loan, I gotta get credit on both of you. So there's a lot more details on that on this loan, but I wanted to make sure that you understood that for FHA loans are not just for first-time home buyers. Okay, I hope this was helpful for you. Call me if you have any doubt, any scenario that you might think, well, maybe that is the loan for me, or no, maybe not. That's not the loan for me. So let me know.